fees. Throw in this newfound versatility and the top 3 Indian IT firms could soon be amongst the top 10 in the world. Worries about volatile currency and the persistent weakness in US and European economy remain, but the overpowering mood is one of confidence, and as these big wigs take giant leaps in the global arena, the smaller ones are rushing in to take their place.
But that is if and only if the smaller firms are able to find the right space left behind by their bigger rivals. If not, there could be an unprecedented shakeout. That and more is coming up after the short break. Stay with us. Welcome back. You're watching ET Inside. A distinct demarcation is becoming obvious in the IT and BPO industry. While the big four are firming up their strategies to take on global competition, smaller players are finding themselves in tough terrain. Prem Shankar finds out what Tier 2 and Tier 3 companies are doing to adapt to the new environment.
The rules of the game are changing. Indian IT giants are reinventing themselves and seeking greener pastures. And it may well be time in the sun for the smaller IT companies. That's because these persevering smaller firms can now make the leap to the big league to fill the vacuum created by the top rung.
We are seeing a lot of these organizations, these financial institutions across the globe are undertaking a lot of business transformation initiatives which are resulting a lot of investment dollars to do the transformational agenda, to change the business. And we are seeing a huge level of demand ourselves in that area. Just to give you some sense, we ourselves have probably about 700 open positions continuously for past 6 months. And I'm sure we are not the only one.
When the leaders in this industry grow faster, they also create a market. And I think everybody benefits from that market. This has been a good year for Tier 2 companies like us, and we think that this is going to continue because the overall market is likely to expand. And as that overall market expands, every player in the market has opportunities.
The government estimates that at a 20% year-on-year growth, the industry's revenue will touch $72 billion by 2011-2012. About 75 to 80% of that will come from exports. With large players shifting focus to the domestic market, smaller and medium-sized IT companies will battle it out for this pie. IT service accounts for the largest chunk of export revenues of the sector, followed by BPOs and software products and engineering services. But the last is not the least in any way, because it's the segment with the highest CAGR. If these numbers are anything to go by, then companies that differentiate themselves will be the future winners.
In any industry, if you are a smaller player, you have to focus, you have to narrowly define yourself as a niche player. And if you are a niche player, you have a unique service, unique solution, you have a unique relationship, there will always be a role for a niche player. It is the place in between. You're neither large nor a niche player. You try to be a generalist and you're small. That's what is going to be challenging to protect.
Take the BPO sector for instance. These organizations are upping the ante by providing value to their services. The Indian BPO is now not a mere back-office voice-based operator service or transaction support center. It has evolved into a skilled workforce, offering a huge talent pool with domain-specific expertise and innovation. Clients now want their Indian BPO partners to share in the risks. NASSCOM has coined a new term for this, BPO 3.0, which means outcome-based engagement rather than just focusing on lower pricing.
Outcome-based engagement is one important aspect of it. Also, see, our view is that the BPO industry is going to grow 8 to 10x of what IT industry is today over the next several years. And the reason we believe in this thing is that the new industry mantra, not in the BPO but industry at large, is to variabilize their cost structure and have a virtual delivery model. So they will work with a series of specialized partners.
Possibly the newest emerging boom market for the second-rung IT companies is the domestic market itself. Research group Gartner expects the domestic IT services market in the country to grow the fastest, 16% compounded annual growth rate by 2014. This will take this market to $13.6 billion as against $9 billion in 2009. big government spending on the National Unique ID project, e-governance and large-scale digitization programs is expected to boost the balance sheets of the smaller IT firms.
India, there has been a lot of opportunities. Essentially, we have TCS performing very well in the government area, in the corporate area, and we have also got some of our subsidiaries working. For instance, CMC is largely an India player and so on, so that has been working as well.
BPOs too are expected to make hay in this summer of the IT industry in the domestic market. Gartner predicts specialization in niche services by BPOs and diversification of their portfolios to include HR process outsourcing and finance. In fact, hybrid providers may soon be the norm, changing the rules of the game itself.
We are increasingly seeing these multi-tier BPO deals, meaning customers preferring providers with hybrid capabilities, as in capabilities not just in F&A, for example, but capabilities across various levels of services segments.
Understanding of customers' business is absolutely critical. In the IT industry, I would say a very, very strong differentiator would be the amount of specialization that you have.
Challenges though are omnipresent. One of the biggest problems faced by Tier 2 and Tier 3 IT firms is attrition. With the Big Four on a massive hiring spree, churn within the second rung is the norm. Countering this and ensuring retention of skill will be the biggest challenge faced by these firms.
In a small company which is very niche focused, you can give exciting opportunities to younger lot, and you can make them managers a little early in their career, make them responsible, so accountability is little more sharper. So these are the advantages, these are the strategies we see the mid-tier companies are adopting at this point of time.
The $60 billion IT industry in the country is possibly witnessing its second coming, and the journey is now to the interiors of the country